All right, hello and welcome. We're going to talk today about how to find and fund a franchise business with less than 25,000 out of pocket. So thanks for joining us. This is the Investor Financing Podcast. I'm your host, Bo Eckstein, and we're going to walk through a presentation I've been preparing to do live, and I figured why not make it into an episode and talk through it. We've got a lot of good nuggets in here, so let's get started. All right, so key benefits of franchising. One, it's a proven business model, right? You're buying a concept with systems and processes. It could be an emerging franchise concept with, just a handful of franchise units, or it could be a very established franchise concept with hundreds and hundreds of units. So depending on the franchise type of what stage you're buying in, there's obviously brand recognition, sales and marketing, training and support, collective purchasing power, decreased risk compared to independent startups. And franchise are typically easier to finance via SBA lending. So prior to August, they had a approved franchise directory. It didn't mean the franchise itself was vetted out by SBA, but it meant that it was approved to be fundable in that directory. They got rid of that directory, and now they're just using kind of prudent lending to decide if it's a franchise model that bank or credit union would want to lend on. But really, when it comes down to it, franchise models are designed for somebody maybe that's transitioning from a corporate job, and this is their first undertaking, or it could be a very experienced entrepreneur who likes the brand and concept and likes the business model and wants kind of something that's more turnkey and not reinventing the wheel. So there's a lot of use cases for franchises as we're going to dive into it a little bit through this presentation. And here's some general statistics I thought was pretty interesting. 92% of franchises survive year one, whereas 80% of independent businesses survive. And I've been pulling different research and really trying to hone in on exactly some key attributes of why you may consider, instead of starting a business or potentially buying an existing business, why would you want to look at either a franchise startup or franchise resale? Only 50% of non-franchise businesses are still operating after 5 years. That's pretty staggering. Contrast with franchise businesses after 5 years, they're at 85%. So you're seeing some big separation as why, a franchise model might be a better fit for you. And then resale. Franchises businesses sell at 1.5 times the price of a non-franchise business on average. And I think that was it was a university that did the study, and I should have put them in the screen here where we got these statistics from. They're in my notes here, and I can't see them because I'm on the full screen. But anyways, as you can see, there's some, key benefits here of why franchise might be a good avenue for you. Trends in franchising. Right now, we're seeing a lot of movement towards recession-resilient business. These are in really high demand. Real estate investors, we're seeing a big trend of multifamily syndicators, real estate investors. They're becoming much more active in buying or looking into buying franchises. And that is because as the market has gotten a lot more tight in the real estate investor space, there's still a lot of opportunity in these operating businesses. And as many of us know, cash flow is king. And I think these business models prove to be maybe, I'm not going to say it's a better investment than real estate because I love real estate and I'm always going to own real estate, but it's a different investment where you can get higher cash flows based on your dollars that you're investing into the project. So I do believe that, although it's a business, it's not passive. Although there's ways you can make it more passive, which we're going to dive into here. Buyers, who's buying? We have a lot of tech entrepreneurs. We have a lot of tech salespeople, lawyers, doctors, people that are high paid W-2 that are still keeping their jobs, and they're looking at this and buying this business as kind of an investment asset in their portfolio. So we're seeing a lot more of that lately. Why are they buying? I think franchise models have been around forever. It brings in over $800 billion into the GDP, at least for 2022. Employs millions and millions of people. Proven systems. I mean, people need their heating and air conditioning. People need their plumbing. People need their drains cleaned. These are the recession-resistant buildings. Gutter businesses, painting companies. Those are franchise sectors which are hot. We're seeing a lot in the plumbing, HVAC, painting, handyman services, gutters, just to name a few. I mean, there's a lot, really, when you think about home service, like what services you get done, and then garage door repairs, right? New garage doors, door renew, all these companies, screens, fixing screens. These are all recession resistant, resilient businesses. Now, this isn't the end all be all, but I do think that some of these models are very attractive. And the other beautiful thing about the franchise models, a lot of these companies, let's just say it's an HVAC franchise, they don't want you to, you don't necessarily need experience in HVAC, which seems counterintuitive, but that's what a franchise is all about, is taking somebody that may not have experience in that particular business, but has the skill sets, and they become successful because they follow the recipe. So a lot of these franchise models, you don't need specific skill sets in that trade service. Additional benefits of owning a franchise. Potentially there's greater tax advantages. We're seeing a lot of W-2 employees that never had an operating business. Now they're understanding having an operating business, there could be a lot more cash flow incentives. You can write off a lot of the cars, trucks, and equipment. It gives them a lot more flexibility owning a business versus being a W-2. And, our great tax code really helps small business owners the most, I would say. They give the most tax advantages to small business owners. So that's why I love being a small business owner. The other nice benefit, too, is, remember, if you're starting a franchise and then you develop it over the next couple of years, it's an asset, right? It's going to sell at a multiple of revenue. So you're building an asset, just like taking a house and fixing it up and getting a higher ARV. You're doing the same thing with a business, right? You're taking a startup franchise model, you're developing it. Potentially you end up buying 2 or 3 or 4 territories. At some point, there might be a private equity company or a bigger operator that comes in and wants to buy those from you. You're going to sell it at a multiplier or a multiple. So there is a lot of upside on that part, as well as the cash flow. And when we go in here, potential increased cash flow compared to fixed salary. So, right, like the better you run the business, the more cash flow you're going to make. Franchising as an asset class, as I touched on it before, it's really becoming an asset class. There's people that are doing multi-brand franchises. So they might own an HVAC company, a plumbing company, a painting company. They're owning in their territories, or maybe they're going national and they're owning in different MSAs throughout the nation. So, who's doing this? I mean, there's a ton of different business models. We're going to really jump into that, but there's people that are finding operators, and they're doing a JV type of arrangement. There's franchise models that have a passive element where that franchisor will actually run the business for you. So more and more professionals in the workforce that may own another business are diversifying their portfolio into these service-based businesses. I mean, it's not just service-based franchises that we work with. We work with 4,000 different, literally there's 4,000 different franchise concepts. We probably work with 600 to 800 of those. And so a lot of the service-based business models are relatively low startup costs, very low, typically low overhead versus a quick service restaurant. And so the trends we're seeing is that people that are looking at franchising as an asset class, like these service-based businesses with relatively low overhead. So now we're going to talk about franchise models. So we have the owner-operator. That means that Jim buys into a plumbing franchise, and he's in the truck, and he's running the business in that sense. And some passive models we have is fully passive. That means the franchisor runs the business model. Nothing is fully passive. You got to manage the ownership team and the management team. There's tax, accounting and things you have to oversee, but that's as passive as it really gets. There's semi-passive or executive models. There's hybrid model where investors own a portfolio of franchise concepts and outsource management of the business. So there's lots of different ways to kind of structure it. I was just listening to somebody, and what they're doing is that they're basically partnering with up-and-coming entrepreneurs and partnering where they're doing a joint venture, and then they get one person that's operating, they're part owner, right? So the investment company is helping that entrepreneur or aspiring entrepreneur get off the ground by partnering with them. Then they're getting a successful operator in there, and they're collectively, I don't know what they're offering as far as ownership structure, but as you can see, a lot of these business models need somebody, whether it's a district manager or general manager, running the business. So if you're trying to be passive, well, what if you incentivize that GM or give them part ownership in the business? And that's what this one company I was following is doing, and they're doing it across many different franchise models. So I thought that was very interesting. How to select a franchise that is best for you. With over 4,000 franchises, how do you narrow down your search? That's a good question. Well, I'll tell you how I was trained and what I see that works. So let me rewind a little bit. A couple years back, as I got more and more into doing SBA financing, people would come to me and they'd say, hey, I want to buy this Wetzel Pretzel franchise. And I started kind of asking questions like, well, why this franchise? Well, I just go and I like pretzels and it always seems busy. But they never really had a process. They just liked the concept. They liked the pretzels, which I don't believe is the best way around. So as I was diving down the rabbit hole, I learned about this whole industry as franchise brokers, consultants. So I ended up partnering with an association, and I have been training in this industry for years. And when you work with a franchise consultant or broker, typically they have a process to help you match to the best business model. And so where does that start? That starts with, usually it starts with initial conversation, and then they usually ask you to do a business assessment, which is, it's called a Zoracle profile. And it's like a disc profile, but geared specifically for the franchise and business industries. And so we have candidates go and take this Zoracle profile. And then after that profile, we usually spend about an hour going through the different sectors and having you rate these sectors. And also during that consultation, we're going through and what you would do as a business owner in that sector. Because a lot of people think, well, I don't want to own a gutter business. I know I'm not handy and I don't. But when they understand the business model, they go, okay, well, I could do that as a business owner. It's, these skills, and that's what I have. So we help open up the minds of these candidates to understand what these business models may do for you. Then also during that time, we have to figure out, well, what's your fundability? Do you have good credit? Or may you be eligible for SBA financing? Do you have cash on hand? Do you have retirement vehicles like an old 401k that could be rolled over and used as your equity injection for the SBA loan, or could pay for the franchise startup itself through their retirement account that's not really yielding them good results? Maybe they have a lot of equity in real estate and they could put an equity line of credit. So there's working with I guess the bottom line is working with a franchise broker team, whether it's my team or somebody else you find. I think it's extremely important to work with somebody that's good, that understands these business models, that's not just going to push you down a rabbit hole, but give you kind of the framework to help you identify some of the best business models for you. You don't pay for their services as well. It comes out of the franchisor's marketing budget. So the bottom line is, if you are looking for real estate, and wouldn't it be best to find the best buyer's agent in that market that understands the neighborhoods, that understands the sales that have been happening? That's exactly what a good franchise broker will do for you, and it doesn't cost you anything. So highly recommend it. And we'll dive into how you can work with a franchise broker on our team. but let's go, finish going through some of these slides on the presentation. Okay, so, and I kind of just talked about this. Why a franchise consultant is your best partner. Phase one is they get to know you, build rapport. They help candidate or client begin to think through options. Typically, you would provide feedback on some different sectors on what you like and dislike. We talked about the Zoracle. Phase two, narrowing options. Franchise consultant typically circles back with 5 to 9 franchise concepts. So let's rewind here. So you have your initial call. You like what that person said. Most often, if you're working with somebody on our team, we're going to have already given you a link to take the Zoracle profile, which takes about 10 minutes. After with that, we've already had like kind of an overview of your financial capability at this point, what everything looks like. And then you have after you take the Zoracle, you do about a 45-minute to an hour call where we go over the different categories and sectors within the franchise world and figure out, based on this conversation and dialogue, what sectors might be good. Then after that call, the franchise consultant or broker will probably circle back typically with anywhere from 5 to 9, sometimes as many as 15 different franchise concepts for you to review. During that next call, they're going to review with you these different concepts and really kind of give you a good overview of what these business models do, how they run, the opportunity. Then they give you time to go through those franchise concepts. They're usually sending you a candidate package, which has some basic information about the franchise concept and gives you a little bit of color on that concept. Okay. And then let's just say 1 or 2 of those ideas out of the 9, you like 2 of them. From there, what happens is you usually will get the franchise consultant will set you up with a discovery call with the franchisor. They typically have a couple people or at least one person that works for the franchisor that goes through the day in a life and has a process to help you understand the franchise concept, the day-to-day, what you do within that franchise model. And so there's a full discovery process as you're going. So from there, you do just like I said, you do your introductory call with that franchise concept. They usually have 2 or 3 calls with the franchisor, which covers, unit economics, the FDD, which is a franchise disclosure document, territory review, because some of these obviously have geographic territories that you buy into and locations. From there, everything looks good. You go into the validation process. That's where you actually call or schedule meetings with other other owners in that concept, right? So you might be in San Diego, but you might call an owner in Tennessee that owns the franchise model, and then you can spend time with them really understanding the business model itself and asking questions. And so the franchise broker and consultant, they're going to share a lot of checklists and prep you. So when you're making these calls with other franchise owners, you really get the most value. I think this is probably the most important thing to do. A lot of people kind of gloss over it because they like the model, but I think you really got to dig in with questions. And really, this process too also helps you validate numbers and what can I expect first year and things that might not be that apparent, because there's certain things that can be disclosed because of the franchise disclosure. If it's disclosed in section 19, nobody can make earnings claims other than what's disclosed. So when you're having the call with the other franchisee in the system, this is where you want to but you want to get more information so you can make, so you can start, that's why it's called validation. You can validate that, everything you've heard so far sounds good, and you're validating that with other people that are running the business, just like you will be doing potentially. So after that, you like this franchise model, you've done your validation calls, you're lined up for funding, and then typically you're going to fly to the corporate office. You're going to do what's called a discovery day. And during this discovery day, you're gonna meet the ownership and management team. You're gonna really understand the model. It's gonna really be it should at this point either everything should be at this point coming together like, yes, this is this brand. I like this concept. I see myself. I like the ownership and or management team. You're really getting to see under the hood. And at that point, the franchisor and the franchise yourself, right? They have to award you. So some of them, you're not just automatically approved because you want to buy this franchise location, this territory. It goes both ways. You have to be awarded because they don't want to put, right? They want to bring people in that are going to be successful because that's how their brand wins and keeps growing. So it is a two-way street that you want to have to buy in and they want to have you buy in, right? And so that after discovery day is typically when you would be awarded that territory. Now, remember, throughout this process, the franchise consultant is meeting with you usually once per week, at least for check-ins. They're providing checklists. They're doing a little hand-holding, call coordination, and they're providing different resources. So this is really kind of a high-level overview of the franchise buying process and discovery process. And that's why, as you can see, it's pretty important to get with the right franchise advisors or consultants or brokers, whatever you want to call them, because there's a lot of moving parts. How to raise capital for your franchise business. So when we talk about raising capital, it means how are we going to fund this business? Obviously, if you have a lot of money in the bank, that's a good thing. Sometimes people bring in friends and family. Maybe they give them a small percentage of ownership. You can do JVs or partnering with other entrepreneurs that also want to own businesses. Seller financing. Some franchisors provide some financing. There's not too many, but there are some that do. They will finance a portion of some of the costs. SBA financing obviously is probably like the highest leverage you're going to get. They can finance up to 90% of a startup. Most banks want to be at about 80% versus the 90%, but we do have some banks that will do 90% of the total project costs, so franchise fees, all the startup costs, marketing costs, and so forth. Also, what we talked about before, sometimes you have an old retirement account. You can do what's called the Rob's rollover if it's eligible, and that could fund the down payment for the SBA loan, or if you had several $100,000 and that was all you needed to fund the full startup of the franchise, including working capital, you could do it that way. Another way is you got a bunch of equity in real estate and you're able to put an equity line of credit on your property. That's also another way. So now let's get into example of a $25,000 out-of-pocket franchise acquisition. So on the left side, well, it'll be your left side of the screen, I believe. Franchise fee, this is, let's just pretend this is an HVAC startup company. And so the total project cost is $178,600. And if you look on the SBA loan side, it says 90%, right? They're financing 90% of total project cost. So you need a 10% equity injection, which would be $17,660. So as you can see, these smaller loans can typically, I have a bank that I work with, not exclusively, but most of the time, and they'll finance up to 90% of total project costs. And you can see in this example, we financed $50K in working capital. So that's your startup cost to keep, to pay the rent and different stuff. Sometimes we build in a few months of rent. I mean, the point is that 10%, is that 17 grand I'm putting in. I shouldn't have to tap back into my own funds because I'm building it into the working capital and I'm building it into all the marketing, and everything is built in to what we call the total project cost. And then the numbers, if I had to fund 85% or I had to put 15% equity injection, that's $26,000. If they were funding 80%, I'd have to put up $35,000. So as you can see, if SBA financing is golden for these service-based franchise startups, relatively low out of cost. And as you're exploring, you're going to see the potential revenue that these business models can do. Now, granted, you have to run the business and you have to follow the recipe for it to grow in cash flow. But with relatively low money out of pocket, you can get in the game. And so that's really why I wanted to put this presentation together, to show people, look, you can do it. You can do it. You've been stuck at your job. Maybe you're just wishing. I had, like last week, for example, had a gentleman, he's a police officer, and he's like, I want out of my job. I've been doing it for X amount of years. I hate it. He literally said he hated his job. He doesn't have too much money. He might have had like 30, 40 grand. That's it. Okay. But he has good credit, fits all the other boxes. We can get him SBA financing. So he's like, he literally told me I would shovel poop to get out of this job. And I'm like, well, there is actually a franchise that does dog poop pickup, but I was joking with him. But the point is, there is actually a franchise that does that. But the point is that anybody out there that's watching this right now, we can devise a plan for you. Maybe you don't have that much money right now, but maybe there's a way to get a partner, or maybe there's a way to get a gift from a family member. It's very feasible that we can get you into the game. And that's what I want to help 10,000 people, aspiring entrepreneurs, over the next 10 years, own a business or expand their business. And I think that's very achievable, because if you get creative and use SBA financing, as you can see, you can finance up to 90% of the total costs. To me, this is a no-brainer to get in the game here using SBA financing. It's meant for this. Tips to improve your chances of getting franchise financing SBA approved. So the process for SBA financing is really 3 years of your personal tax returns, a business plan, 3 years of projections. We have a template for that. So we got your personal. Then if you're buying a franchise, we need the FDD, which is franchise disclosure document. We're going to do the projections based off of all the validations you're going to do. You're going to figure out how much revenue you're going to make. So on SBA projections, they want the first year broken out month by month, and then year 2 and 3. That's what we have to do for SBA projections. So that's probably the most intimidating part of the task that you're going to be having to do, is to figure out the projections. We do have third parties that we can refer you to that can help you build these projections. But generally, if you have good personal credit, 680 credit score or better typically, but there's not really a minimum set. Banks overlay the SBA guidelines, because remember, SBA doesn't make the loans. It guarantees a portion of the loan. So we can navigate depending on where your credit is. If there's some past blemishes, that's not always going to be a bad thing to rule you out. But really, I just need that when we do our first calls. I'll help you. I'll walk you through and see if it's feasible that we get you SBA financing. If they're bigger SBA loans, like over 500 grand, they will look for additional collateral if there's a collateral shortfall. But really, if you have good credit scores, good borrowing characteristics, a solid work history, and you're buying into a proven franchise model, your chances of getting funded are pretty high. So it's a lot easier to get a proven franchise model as a startup funded than you starting some idea from scratch. Because you're basically, as we looked at statistics, franchise models have a much higher success rate than a regular startup. All right, so the next steps. You like this presentation, maybe you've been following our channel for a long time, go to franprofile.com and complete your Zoracle profile. It's free. It's going to take you about 10 minutes. Check the box at all, so send you a copy. And then after you complete your profile, after you do the Zoracle, on that same page at Fran Profile, you can go to my Calendly link and schedule our first call, and then I'll walk you through the next steps. So go to franprofile.com, and we'll go from there. Thank you so much. Hope you enjoyed this presentation. This was good practice for me because I'm going to be doing this live, and I have a lot of work on it, but I think you get enough out of it. And as always, thanks for tuning in. Feel free to watch some of the old videos and episodes we've done on this channel. We've uploaded well over 1,000 at this point. We talk all things real estate investing, business acquisition, and franchise on this channel, and entrepreneurship in general. So anyway, thanks so much. We'll see you soon.
Are you trying to escape the W-2 rat race? Or have you always wanted to own your own business? Have you ever thought about owning a franchise? If so, franuniversity.com can help. Our training program teaches you everything you need to know about franchise ownership, from choosing the right franchise to launching and running your business. We have the resources and specialists to help you from A to Z. You'll gain the skills and knowledge you need to succeed as a franchise owner. The best part? It's free to join. Go to franuniversity.com.
Hey guys, Bo Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.